Hi everyone, I am Lori, the founder of the Selling with Lori brand and List and Go marketing service, and I am here with Chris and Lee, also known as the Mortgage Guys, with New American Funding. And today we are just simply going to talk about the market and what's going to be happening as we roll into 2023. I'll specifically be talking about how you can hedge against inflation. And these guys, well, shoot, they're just going to tell you everything you need to know about interest rates and everything you need to know about the home buying process. And so why don't we just start with the news and stuff like that. I know right now it's like really negative out there in the news, and I wish I had a crystal ball to predict what was going to happen in 2023. But what I do know and is the market, the homes have been sitting on the market longer. Also, some are doing price reduction, which I believe gives opportunities right now for home buyers because they have more leverage power than they did a few months ago. You guys agree with that?
What do you think?
Yeah, absolutely. I mean, buyer's market versus seller's market,
yeah,
a lot of upside.
Okay, so what's the average days on market right now? Do you know?
Yeah. The average days on market is in like 45, 47
That's
right
a lot.
now. Yeah, where it used to be 12 and 20.
4. Sometimes things are just being sopped up real quickly, but because interest rates are up, interest rates are kind of high right now.
Yeah.
They're really high. We're in last quarter of 2022 right now, and it's expected that they're going to stay there for a little bit, and then we expect a rapid decline.
Okay.
So what happens during that time frame is that the people that wanted to sell, that said, just picture yourself as a seller. And I'm like, hey, I'm going to sell my house. And what do I want when I want to sell my house? If I want to sell my house, I want the best money I can get. How much is the most profit I can possibly get if I want to sell my house? If I have to sell my house, that's a different game.
Yeah.
So what happened is, as the interest rates went up, there's less buyers. So the people that wanted to sell their house, they're like, wait a minute, I'm not getting what I want. And because I only want to sell my house to make the most profit, I'm just going to bolt. I'm just going to come out of the market. And what happens is the inventory starts to dry up.
Yes.
But there are the ones that have to sell their house. That's the 3 Ds. That's divorce, diapers, and death. Any of those 3 Ds, if I got another kid, guess what? I have to sell my house because I don't fit in this house anymore.
You have to get a bigger space.
Or we're getting a divorce. I don't care if I make a profit. Or somebody died. And then we're not thinking about profit in that situation. So there's 2 different types of the market. Part of it is the ones that want to sell their house.
Yeah.
And if you want to, and interest rates are high and there's less buyers coming in, and then all of a sudden you can't make as much money, you step out of the market. Doesn't mean you won't in the future, but at the moment it's not favorable, and because you're only selling because you want to instead of because you have to, you back out. So inventory drops.
Yes.
Inventory drops, the buyers are like, hey, I can't qualify anymore. Buyers drop, the whole market calms down. And that's where we're at right now.
Yeah, that's months have been cooling.
So the ones that have to, even though they have to, they're like, hey, I gotta sell so I can buy. And that's what's happening over and over. So they're like, I gotta sell, so this was my price, but I'm willing to take less. I'm willing to give seller concession. I'm willing to do more and more stuff because I have to sell. And that's what's going on right now. Mm-hmm. And this is because of monetary tightening, quantitative tightening, which is the opposite of quantitative easing. The Fed's increasing the rates. The bonds are much higher. And remember that the Fed doesn't dictate mortgage rates. Mortgage rates are based off of the 10-year bond. But the 10-year bond is roughly affected by whatever the Fed lending rate is at. So there's this weird relationship that happens. And as the Fed tightens, the markets tighten, the 10-year bond goes up, and then mortgage rates go up. So it's not a direct one-for-one. That's a common error. People think that, hey, the Fed went up, so mortgage rates go up. It's not direct, but it does have an effect. Yeah. So this is what's going on right now. This is kind of state of affairs. What are your thoughts?
Yeah, I'm going to have to agree with all of that. And there's a lot of exciting stuff behind it, though. Really, really exciting stuff. And the exciting stuff is what we're here to share with you guys. And as the market starts changing, as interest rates go up, it's exciting. Why is it exciting? Because it does back off the buyers. It does back off some of the sellers. It does make it a little bit more difficult to get a house. But when you do get that house, you get the best price. You get the
Yes.
best price, and that's what everybody's trying to
Yes,
do is save the
leverage.
most amount. Yes, save the most amount of money, get in low, sell high. So getting in now is actually a really good time if you're trying to invest. It's actually a really good time if you're trying to build a net worth and a retirement for yourself in the future. So I agree with everything you're saying, but I'm really excited about this because 2023 is bringing a whole other opportunity for a lot of people that want to get in.
I really feel 2023 is just going to be a breath of fresh air, and what's going to really happen next year is it's really exciting for home buyers,
Yes.
especially if they're starting a family and they need the more space, or if they need to upsize or downsize. There's a lot of more opportunity out there, and also investing in real estate is one of the biggest things that you can do to hedge against inflation, because homes, they keep appreciating. Just over this past year, homes appreciated, I think it was like 19%.
Okay.
Insane
Yeah.
numbers. Insane numbers.
And I think next year it will, sort of, kind of drop a little bit and balance itself out, but still it's a great ebb and flow for buyers and sellers.
Yeah, yeah.
So if you really know what's going on with the market, I'll give you real life that's happening right now. I have a son in the military. He's 23 years old, and he's like, "Dad, interest rates are high. Should I buy now?" And I said, "This is going to sound weird, but it's probably the best time to buy." And he goes, "It doesn't sound like it's the best time." And I said, "Let me tell you what. The people that have to sell, that are selling right now because they have to, these are the ones that are going to sell. They're going to do seller's concession. They're going to drop price. You've got a lot of power coming in." And there's a lot of buyers sitting on the sidelines saying, "Hey, as soon as interest rates go back in, they go down, I'm going to jump back into the market." Well, when these people jump back into the market, all of a sudden it turns back into a seller's market instead of a buyer's market. And now they start creeping the price up. So if you're able to buy right now, and I told him, I said, "Listen, if you buy right now, let's just say we get you in at a high rate, call it 7%. And we get you in at that high of a rate. But this seller has to sell." So you say, "Hey, I want seller's concession, I want a price drop," and all of these things, and you get all of it. Now, what happens is you've locked in that lower price. And when the market turns, now everybody comes after the other houses that are in this category, and those start to appreciate. Yours starts to appreciate also. And as yours appreciates and interest rates go down, we're able to refinance you. You keep that price that you locked in at, and now you've got the low interest rate also. So if you're able to buy right now, it's counterintuitive. I said, listen, it's like buying stocks. You know when you want to buy a stock? When it's at its lowest and everything looks ugliest and it's the worst. Because if that company survives that time, and that's the key, by the way, if you're buying stocks, you have to make sure the company is going to survive that ugly time. But if it survives that ugly time, when it comes out, all of a sudden it starts going up. And you know when you don't want to buy? When everything is great and it's the highest it can be. That's the worst time to buy. And it's counterintuitive. So if you're actually trying to buy a house for an investment purpose or for strategic reasons, right now is a really, really, really good time to buy, although it doesn't feel like it is. It feels counterintuitive. You know what I mean?
It does. And also, I want to keep in mind and also remind people that there is so much, everybody's situation is different. And especially when it comes to their home, some have a lot of equity that they've built over time, and you've been in your home for 20, 30 years, some even longer. Why don't you use that equity and use it towards real estate and invest in a property, and then lease that out, and then use the rental income coming in to pay down your mortgage, and then now you have two properties under your belt, and you can write it off with taxes and stuff like that on things that are happening on the rental property, and then so you are then hence hedging against inflation. And not to scare anybody out there, but that's what I've been seeing with investors, what investors are doing right now in the market, and also hedge fund companies are now in the real estate space in the past 18 months, going after single family homes, taking away home buyers' homes. So it's important and it's imperative that you connect with us or with whomever and it's important to, if you really want to get a home, now is the time to really embark on this opportunity, is what I feel.
Especially for those that want to live in the house.
Yes.
Especially for those, because I think everyone's approaching it like they're an investor. Everyone's approaching it like, I got to get in low and I got to sell high, or I got to get in low and build the equity. But here's the real question that people aren't asking themselves. If you could have bought at 1970 values, would you? Yeah. 80?
Yeah.
90?
Heck yeah.
2000? 2010? 2019? Every decade, the real estate's gone up. Every decade. Even if you put in the crash from 2008 and you owned the home and you went upside down a lot, well, you're already in the money. You're already in the money. So I think timing it is kind of a bad thing for those that are going to live in it. Do they want the best price? Yes. Do they want the best rate? Yes. But that stuff comes if you just hold on to it. And what I don't want to see, what I'm really fearful of, is that group of people who are on the sidelines that are waiting for the right time, Here's what happens. When interest rates go up, yeah, values settle, okay? But now you might not qualify because the rate's too high. But when the rates come down, values skyrocket. Now you might not qualify because the prices are too high. So get in while you can. That's the message I want to send a lot of the people that want to live in the house.
Yeah.
Get in while you can, because you might not be able to. There might not be a tomorrow where you actually fit in this perfect scenario. So like what Lee said, values are settled right now. They're low. Get in at a cheap price. Yeah, the rate's not the best. But when rates turn, and they're going to turn, and that rate comes down, now you got best price and best payment. So the best of both worlds, you just got to hang in there for a few months.
Yeah, love it.
A lot of it is counterintuitive, though. It's weird to be in this market and go, well, rates are so high, I think I'm going to back off. And then the inventory, there's so little inventory. And if you understand the bigger market and you go, hey, listen, real estate is going to go up over the long term. It may go sideways, it may go down for a little bit, but it's going to go up. And then if you factor in macroeconomics state that the average housing unit starts at 32 years old, 32 to 34 years old. If you backwards to 32 years ago, there was a birth boom. So all of these people right now are 32 to 34 years old, and they're all sitting on the sidelines going, hey, listen, I want to enter this market. As soon as the rates go down, this big boom will come in, and all of a sudden, there's going to be a whole bunch of demand. And because there's a housing shortage at the moment, even housing starts are down. Housing starts are when the builders say, hey, I want to start a house, and they track this stuff. So they track, hey, this is how many houses are starting in America. We kind of know this stuff. Well, housing starts are down right now. They're down a lot. And as soon as interest rates go down, the builders will try and catch up by throwing a whole bunch of housing starts in there. All of a sudden, the market's going to be flush with inventory, and you're going to have a whole ton of buyers, which is going to cause the market to ascend once again. It's just macroeconomics. It's not really brain surgery. You can figure this stuff out. When that happens, prices are going to go up. Interest rates are going to go down. You're going to go in bidding wars again.
Yep.
This will happen, and our best guess, that's the hard part, is we don't know the timing. Our best guess, middle of 23, end of 23, is when all of this stuff is going to happen, maybe first quarter 24. That's best guess of all the people that we pay to study this stuff. If you want to buy, now's a really, really good time. And I tell people, listen, I'm in the business. I've been doing finance since 1992. That's over 30 years. That's a long time. My son said, hey, is this a good time to buy? And I'm like, let me give you the reasons and why yes. And he's a military man, just making a living like anybody else, and just barely on the edge of affording it, just like everybody when they buy a house. But my honest advice to my kid is, yeah, right now is probably the best time to buy.
Okay. Yeah, I agree. So listening to the experts that Lee talks about, the people that we pay to actually study the stuff and figure it out and what to predict is going to happen next. What they say is it's like a roller coaster. Okay, so top of the roller coaster is here, bottom is down here, we're going up on this side. And the first couple cars are already over. So in theory, rates have already started to ease back a little bit.
And I've seen that.
Yeah, and we've seen it in the business, of course. So what that means is January is going to start the ride down. And probably by summer, end of the year is when this thing's going to be in full force. So based on that data, if you're going to buy, when should you start?
Now.
Right now.
Now is the time.
Don't wait till summer. Don't wait till June. Now.
When's the best time to buy a house?
Now.
No! 10 years ago. When's the second time?
yeah,
When's
yeah,
the
yeah.
second
20,
best time to
20.
buy a house?
5 years ago?
Now.
Yeah.
Best time to buy a house is right
That's
now.
so true. That's so true. So please reach out to us. We'd love to sit down with you and have, we could set up a buyer consultation and we could really go over the numbers and really go over logistics and exactly what you need and what you need for, your next home, like with life. And it's really an exciting time. So I think that's a wrap. What do you guys think?
I think so. Thank you very much, Lori.
Yeah, thank you. It's a pleasure, man. Every time
Yeah,
we can
of
come by,
course.
let's do it.
So Mortgage Guys and Lori are here to have your back. So reach out, follow us, and ask us any questions. We're more than happy to help. Until then, next time, have a great day.
See ya.
Bye.